We have with us today Mr. Kamlesh Kumar to address on a very unique topic. I would request Vineet to introduce Mr. Kamlesh Nagware to us. Over to you, Vineet.
Thank you, Arun. Hello, everyone. It's a pleasure to have Kamlesh today. He's a blockchain evangelist, and the topic is so pertinent to the expertise and capabilities he has. Let me have the honor of first of all welcoming him to our forum today. And to start with, I would like to give his introduction about his involvements other than his immediate career exposure. So Kamlesh is a TEDx speaker. He is a top 30 influencer of blockchain in India. He is a founding member of India Blockchain Forum, Hyperledger India co-chair, a member of the Hyperledger Technical Steering Committee, driving technical directions of the Hyperledger Foundation. He is also co-chair of the IEEE Blockchain Initiative at the global level and mentor to blockchain startups incubated by Ministry of Information Technology in India. He's an advisor to Web3, Tokenization, and CBDC startups globally. Last but not the least, he has 35,000 LinkedIn followers. About his career exposure, he has 14 years of experience in software development, IT consulting, and blockchain solutions. He was associated in various capacities with Emphasis, which is a Hewlett-Packard company, Capgemini, and IBM, where he fully led the blockchain initiative. From his education perspective, Kamlesh is a computer science engineer and also did a specialized course with the Frankfurt School of Finance and Management. So, Kamlesh, it's a pleasure to have you today. And Arun, over to you to take this forward, please.
Yeah. Today we're going to have a slide deck presentation from Kamlesh. I request all of you to observe and post your questions in the chat box, which will be addressed by him at the end of the session. I will also would appreciate if you give your feedback as to your on the presentation topic as well as the speakers presentation at the end. So it will help us get, to get more such speakers to align ourselves with your requirements. Over to you, Kamlesh, please.
Yeah, okay. So thank you, Arun and Vineet, for inviting, and thank you for FENC community. It's great to be here. I think most senior people out there and not that much experience, but what have I learned from last 14, 15 years and 7, 8 years in blockchain. So I started my blockchain career with enterprise blockchain. Maybe I will give the insight what is enterprise blockchain, what is public blockchain and cryptocurrency. So unlike other people who started their career with crypto, Bitcoin and Ethereum, I started when I was part of IBM, and we are mostly working on the use cases perspective, how we can use the technology for different kind of industry instead of just crypto and tokens. So today's topic, from the last 10 years, we have seen how the blockchain is impacting the different industry. So, and when it started with Bitcoin and Ethereum, the main focus was the bringing the peer-to-peer payment or the financial services. And now this peer-to-peer moved to the head, and now using blockchain and tokenization, lots of use cases from insurance to financial services to banking to digital assets, many use cases. So in this presentation, I'm going to cover first, this is not required, already covered by Vineet and Arun. So I'm going to cover first what is blockchain and just history of blockchain, because maybe other people out here maybe not knowing what is blockchain technically and how it all started. And then some attributes in blockchain or blockchain characteristics, how it will make it unique and how it's solving the problem in the existing industry. And then going to talk about the use cases or tokenization and other aspect, how it is impacting the financial services industry and real world use cases where blockchain is used and it's really impacting. So if even we can see the Citibank report or India IMF report how blockchain and tokenization could be $3 trillion economy by 2030. So all these use cases are about it, and then how the Indian banks are using blockchain in different capacities. So before going to the blockchain thing, maybe everyone heard about the cryptocurrency. So cryptocurrency is just one some kind of digital currency running on built on some kind of public blockchain network. It all started with Bitcoin. So where one Bitcoin network, thousands of node running, computer node running, and they created one cryptocurrency, some kind of smart contract to define the value of digital money. And without the banking or without any centralized infrastructure, you could send money to each other, that cryptocurrencies to each other. So that was cryptocurrency, and it all started with Bitcoin. But later, when the Ethereum and other cryptocurrency come in the picture, now anyone can build their own cryptocurrency or own currency in just 20-30 line of code, computer software code. And that is when creates a lots of problem in the economy, because people are creating the parallel economy, and there are lots of cross-border payment happening without involvement the central banks and the regulatory bodies. And that's why everyone talking about the regulatory aspect or regulatory compliances around how cryptocurrency and blockchain should be used. But this is mostly due to all the cryptocurrency market, how it impacting, and other many things happening in the cryptocurrency about MLM marketing concept. People are just writing 30-40 line of code, and there's no utility out of there on that currency. It's similar like anybody can print their own currency note, the similar thing. So that was the era of the cryptocurrency. But now from couple of years, because in cryptocurrency it maybe is current value $1, maybe in 10 days could be $1,000. So, and it's not good for the investor and consumer. So then some stable coin concept is associated, where these cryptocurrencies are created but focusing on the fixed value, or it should be backed by any of the any asset. It could be gold, or it could be any physical cash, or it could be any programmatically, where you not allowing this currency value to be fluctuate, but is a fixed value. So like there's a Tether, like the USD, like USDT. There are many such stable coins. So stable coin is equivalent to the $1. It's not changing its value. So that is one. And then there are many other tokens. So all this is associated with this cryptocurrency thing. So let's say, for example, Ethereum is one public blockchain network. When you have an Ethereum token, you could use that network and build your own application on top of that Ethereum network. So it means any token with some kind of value, some kind of utility. Like, for example, if we have any kind of Sodexo card, for example, there's one of the token. Or suppose we go to any mall and we use some kind of loyalty point, there is some kind of token. So utility token is associated with the token which has some value or which has some utility kind of thing. So it's different than the cryptocurrency, where it's just the one currency. Like we heard about the Dogecoin, this Elon Musk's project. So how it will impact the complete cryptocurrency market. And then still this token is challenging because there is no security. So security means where some regulator come in the picture and can define the financial security of these tokens. So you need to follow proper regulatory or regulatory compliances to be issue such kind of tokens, or you provide some kind of securities to this token. So come under the securities law. So this kind of tokens being created later in the era. But all this concept of tokenization, cryptocurrency, stable coin, or utility token, security token, all is some kind of token which is running on some kind of infrastructure, some kind of computer infrastructure. And that infrastructure called blockchain network. But how this blockchain and how it is defined by these 5 characteristics. So blockchain is simply immutable time-stamp series of record of data that is distributed and managed by cluster of computers. So unlike regular database, we are having a one centralized database where we storing our company's information or our financial information. Instead of that one in blockchain, we having a number of node. This number of node depend on the which kind of blockchain or how many stakeholder in your business processes. For example, let's say if you supply chain blockchain network, it could be maybe their supplier, their buyer, there's some trade finance banks or some kind of regulatory 5 to 6 node. But if you talking about the public blockchain network, there will be 10,000 node. So this blockchain node where you storing all your data, which is uniquely distributed across all the nodes. So whatever the node you go and request the data, it is the same data. So assume, let's say instead of like for example, we heard about some kind of security hacks or any of the data losses due to security or cyber security kind of threat. So that happen because there's some centralized storage. If one central server goes down, then you are not able to access the server, or if your one centralized server modified by some hacker, then you lose the data or you lose the integrity of data. But in blockchain, this data is shared across all the node. What are the node in blockchain network? It could be 5, it could be 1,000, it could be 10,000, depending on your blockchain network. And every data, whenever you updating this node, all this updated simultaneously with the consensus of node. Consensus of node means like every node need to approve whatever the data you are entering or updating in blockchain, this servers. And blockchain use the traditional cryptography and distributed computing or peer-to-peer communication technology, and bring the security from the inbuilt. So whatever the data you is storing in blockchain, it's some kind of cryptographic hash, and that cryptographic hash is connected to previous block and previous block with previous block. So it is technically impossible to modify or delete the data of any blockchain data which you entered, because every block has the previous information of the previous block, and so on. So let's suppose, for example, if you inserted your information in, let's say 10,000 block number, then if someone want to modify this data, he need to modify all the 10,000 blocks and all the computer node at the same time. This is technically not possible. So, and using all these characteristics like security, and consensus or distributed ledger, shared data, it brings us trust and transparency on the data. For example, let's say there is a one central data, you need to believe that owner of or maybe admin of the central data storage, you need to believe one person, and it always it could be wrong there, right? Sometimes he can modify the data, but in blockchain, this trust goes to the technology itself, because there are number of nodes and every node having the same data and same ledger. So in the database, whatever data is storing in this node could be trusted by every stakeholder in the ecosystem. And this brings the transparency in the data, because let's say, for example, let's say there's a Citibank and the Federal Bank is doing business to each other. Current inner environment, both have their own IT systems and on their databases. So there need to some third party like maybe SWIFT or any of the central authority to bring the trust, or also audit to bring the trust in their accounts. But let's say if there is one common distributed ledger between all the stakeholders, then you don't need any third party or any of the intermediary to bring the trust. You pushing this trust to the technology itself, where technology itself bring all the trust, because data is stored in multiple node and multiple storage with consensus and mechanism. Like when all approve, then is database updated, or cryptography is in place, so nobody can modify the data until all people approve or all node approve. So this brings many things, and technically, if we combine all these offerings, blockchain bring the connected ecosystem that bring the efficiency. So That's why there's a use cases in supply chain, use cases in e-governance processes where you bringing this efficiency via the technology, because all the network participants are connected to each other. So there's no follow-ups to each other. Whatever the data you processing is directly real time goes to the another participant. Data is shared across all the nodes, so there is no any reconciliation kind of thing required, because data is actual data is stored on all the places on all the node. And the one best feature in the blockchain is a smart contract where you write your all the business processes, you are in some kind of computer software code, and that execute automatically whenever some conditions met. So just example, let's say for example, if a farmer apply for the agriculture loan, and currently if he need to go for the settlement, he need to apply for the insurance and all other parameter, and then insurance company verify the his claim and everything. But now assume, let's say if this is a blockchain based smart contract running on the insurance blockchain network, and whenever some certain scenario, let's say there's a drought is there or there's maybe flood is there, so using the parameter of this natural thing, you could trigger this smart contract automatically and settle the contract. Similar, for example, in the flight delay insurance, right? So you can simply measure this flight delay using simply your time and the flight time, and directly disburse the loan amount. Sorry, our insurance claim. This kind of use cases. So smart contract bring all this this efficiency in the ecosystem. Another is immutability. So we talk about like data is stored in multiple nodes with cryptography in the nature. So it's immutable. Nobody can modify until all people should agreed to update some certain information. And data is distributed across the number of nodes. So whatever the node you are accessing, you get the same information. And this is even hacker proof. For example, let's say there's a 10 node. If let's say hacker is hack 2 node, still we have 8 node alive, which we can use to get the data. So technically using this all these parameters, if you go through this particular slide, you will get like blockchain first is secure, another is immutable, another thing is the anonymous, because anonymous is mostly in terms of public blockchain where you have doing the transaction to each other, but in the using the public keys or some kind of anonymous IDs, there nobody can identify. Time stamps, so every data whatever you're storing, it is time stamped with a particular time, so you can identify when this data is updated and who's approved this data. Programmable, so using the smart contract in the nature, you can program the every business processes which you have. It could be supply chain, it could be financial services, it could be payments. And using all this thing, you can bring the trust, traceability, and tamper proof in your business processes. And using all this, there are many benefits to the different aspect business operations. Let's say reduce settlement time. So currently, all the financial market, whether is working on T+2 or T+3 or T+1 settlement model, but using blockchain, you could do this settlement in real time. So even currently, DTCC, when the US settlement company is parallelly running this blockchain-based system to do the real-time settlement. T+0 the transaction done, settlement done. You don't need to wait for the backend system to trigger the settlement process after 2 days or after 3 days of the transaction. Another, the improve the liquidity, because when you doing all things real time, it will bring the liquidity in your businesses, and it will create the new market. So new market, let's say in tokenization, there are new market of the cross-border payment is emerging using blockchain. Tokenization, where you bring the fractional ownership of the asset. Uh, you can bring the liquidity in the liquid assets. Operational efficiency, so because technology is bringing the trust and the efficiency, you could reduce the intermediary cost, increase the automation of business workflows, or using blockchain, you're also reducing the need of reconciliation because data is stored across all the nodes. So you don't need any reconciliation layer for the your business processes. And it also enhance with the your cybersecurity risk, because data is immutable, shared across all the node. So all this is bring the business benefit to the risk reduction in your existing processes. So in initial, I just talk about the cryptocurrency, other thing, but cryptocurrency is just one use case. There are thousands of use cases in the different industries. Insurance and banking, in financial services, healthcare, government, education, real estate, and many things already happening. It's not just only theoretical use cases written here. KYC identity management already there in government in India itself. Like we are using our some of the state government already started issuing degree certificate or e-governance records on blockchain. Land records, some of the state government already doing the land records on blockchain. Digital currency is one of the CBDC is a hot topic nowadays. More than 120 plus countries already exploring. So in India already this digital currency, and not India, more than 15 countries already live in production in the CBDC. I have more detail in the next slide. In the trade finance, many blockchain networks out there like V.Trade, like TradeLens, like many out there who are bringing the efficiency in the trade financing and invoice financing. And similarly, many use cases. So in my philosophy, whenever we need the trust and transparency in any of the use case, blockchain can be applied, because blockchain brings the trust using technology and transparency via the shared database with the smart contract in nature. So in today's more topic about the tokenization. So because this is a huge topic and everyone's talking about it. Even in recent report by Citibank, they predicting like tokenization could be $3 trillion economy in the financial services itself, because there are many use. Even recently, Goldman Sachs is tokenized their physical gold. JP Morgan is already tokenizing even their cash, digital cash kind of thing. So there are many use cases happening. So in technical definition, tokenization is simply digital representation of an asset, and that asset could be anything. It could be money, it could be stocks, it could be real estate, it could be warehouse receipt, or it could be any precious metals. So tokenization is simply digital representation. Maybe you heard about the digital twin nowadays. The similar thing, kind of digital representation of any asset, and this asset could be any liquid or whether physical, whether fungible, non-fungible, any kind of asset. And tokenization help in the digitization of assets. So let's say for gold is one asset which is not digitized, and still in banks we deposit cash, right? That is also a liquid asset. So there are use cases where you can deposit tokenization of deposit cash is there. It also brings the asset liquidity, because the what the liquid asset now is as a liquidity in the market, and also it provides lots of ecosystem for the asset management infrastructure. So there are many asset management companies can use blockchain and tokenization for bringing the efficiency in their existing processes. And there are many use cases which we talked about: the cryptocurrency, utility token, we can leave it. The CBDC is very hot topic nowadays. So central banks in India and central banks globally, more than 120 plus, you can find the cbdctracker.com with all the details. More than 120 plus countries already exploring and piloting the CBDC. In India, we have wholesale and the retail CBDC both live in, where are millions of transactions already happened from last 1 year. So from last 1 year, we are doing the pilot of wholesale CBDC that is running on blockchain. And there are many use cases in the NFTs too. So NFT is some kind of non-fungible token. So some kind of digital representation of any non-fungible items. Let's say any luxury goods, or maybe precious painting, or any of such kind of asset. Even Metaverse is using the NFT of even kind of digital representation of lands in the metaverse environment. So all these use cases happening in the tokenization. CBDC, which is changing the completely banking ecosystem or the currency ecosystem. So where instead of printing a note or printing a currency, you just creating a digital form of money, which is a legal tender by any central bank. So assume how much cost it will save. Let's say currently, if India is printing the cryptocurrency, if India is printing the money and distribute across the 140 crore people, it's costly efforts. But using digital money, because already we are using the UPI and other payment infrastructure, which is strong infrastructure. So simply similar form, you could instead of printing a money, you can just simply create a digital form of money, and not just the digital form, but there are many use cases out there. You could bring the programmability. For example, let's say if government want to give subsidy to farmer for purchasing a seeds and the fertilizer, so now this could be programmed on the CBDC, right? This particular tokens or CBDC will be only accepted by those stores or shopkeepers who are dealing with the certain fertilizers and the seeds only. So now see how it could impact the complete ecosystem, and not just the agriculture, but any kind of use cases where, let's say, for example, the father want to give money to his son, it could be programmed. It money can be only spent on that purpose. So all this thing and many other things could be out there, like cross-border payment will be very easier and effective, because let's say if all the central banks are running their CBDC network on blockchain, and you can simply do the cross-border transaction with these networks. So what is CBDC? So CBDC is a digital currency, central bank digital currency. So is a backed by, is simply we can say is the cryptocurrency which is backed by the central banks. So in RBI already we started called like e-rupee, digital rupee, which is running on blockchain network. And instead of printing a bank note, we are issuing the digital rupee. Even I am one of the user where I'm using the CBDC wallet. But there are many impact of CBDC. So one is financial reporting. So there will be clear and accounting, because everything is digitized. There is no any paper currency where you need to identify how much money distributed, where is the my currency notes. Now this is completely digital, and even all your financial instrument or could be managed via this digital form. Regulatory challenges are there, because you need strong AML and KYC, because assume if let's say all your money transaction happening digitally, even your money is digitally, then you need more secure environment. And that's why there are new legal frameworks need to be designed. But it will also open the new business model. So I just talk about the, let's say, programmability part. So there's new fintechs come out there who could work on different use cases around the CBDC to work on the solution. Let's say programmability, they will bring the programmability on top of the existing CBDC network running out there. And the cross-border payment is the biggest example where this CBDC can impact. Currently, uh, uh, cross-border payment is costly because there's a traditional bank, central bank, and traditional regulator come in the picture. But suppose it is a complete digital form of money, you could simply, let's say, you just uh, issue token here in one central bank network, and when you transfer to other bank, you just burn the token here. Simply one transaction, you can do that thing. And CBDC is not new thing. If you see this global map, we can see already 11 central banks already running the CBDC network live in production. There are 21 banks already in the pilot stage. That means they already developed something and is in public phase. People are trying it, and 32 banks in the development stage, and other banks are researching, and 2 even cancelled, maybe the different motive. So as you can see, globally this thing happening. So this is about our Reserve Bank of India's CBDC pilot. So still we have a stronger digital footprint, but still we want to see there could be more financial inclusion in the remote areas using the CBDC. Another, it will reduce the operational costs. What is involved in the physical case in management, like ATM, money printing and distribution. Uh, it is it will also help to regulate the cryptocurrency, because if the central bank issue itself their own cryptocurrency, which is backed by them, then it will it will regulate the existing cryptocurrency market. Cross-border payment is a bigger use case, where because if all the central banks near is working in the cross-border payment on blockchain-based network, then it's very easy to issue tokens and transfer token to each other, and it will bring the efficiency and the lower transaction cost, and more about the complete transparency in the monetary flows. So, couple of central banks already a couple of banks in India like State Bank of India, ICICI Bank, Yes Bank, HDFC Bank, already in different cities, already in the pilot stage. So this is one just basic example, because in India there's a lot of debate about we have UPI, Unified Payment Interface, and why we need the CBDC, but both are different. So UPI is one payment interface, but CBDC is a currency, is a digital currency, is a digital representation of country's fiat. But UPI just you are transferring the money or transferring that currency. And this is about we maybe there debate like cryptocurrency and public blockchain network, but mostly all the central bank digital currency projects are building on Hyperledger or any of the permission blockchain network. No one building on Polygon, or no one building on Ethereum, or any of the public chain, because any government, any central bank can't write the transaction or any of the public ledger. They're going to be write their own permission private blockchain network, what Hyperledger or any of the private network offers. So you see this global web where the CBDC pilot is happening, mostly using the Hyperledger Fabric and Hyperledger Besu all around. So using all this parameter, there are from couple of years, the new term is flowing around the financial services. What is a decentralized finance? So decentralized finance is the term, like in the traditional finance, we have insurance, we have banking, we have payment, we have loan, and all other traditional way of the banking thing. But in the decentralized finance, the new way of the financing with blockchain technology, where you can lend, borrow money with simply on the blockchain infrastructure. There is no any central regulator come in the picture. There is simple peer-to-peer lending, simple to simple lending and borrowing, which is the running on the decentralized exchange. Simply you can put your token and can earn the interest, and crowdfunding, transfer of payment. So completely decentralized. So simply just convert your decentralized central traditional finance instrument in a blockchain-based environment, where you are doing all this what you're doing in your traditional finances, doing on the blockchain. And there are many use cases of traditional finance, like decentralized network, the loyalty program, for example, security issuance, and lending and borrowing, mortgages, loans, payment settlement, and so there are many decentralized exchanges available where you can put your money, like how you go to bank and deposit your money. Similarly, you can go and deposit your tokens. It could be any of the token, it could be NFT, it could be cryptocurrency, it could be stable coin, and you can get the returns in a real time, daily basis, or weekly basis, similar to how the traditional finances works. So because this brings the decentralization in the finance, or more autonomy to the consumer, or the investor, instead of centralizing the bank aspect. So, and there are I talked in the initially, there are many use cases around tokenization of the enterprise use cases. So in enterprise use cases like physical asset like diamond, vehicle, or shipment, or gold, or deposit cash, all those could be tokenized, and it bring the smart contract and automation and the liquidity in the those enterprises. So this is more detail how you could change your how the token actually works. So you simply define the behavior of token like is mintable like if tokens after the use of token done, you can burn the token like, and you can transfer it with insurable or the supply control. There are many other different parameters like how you're going to define those tokens. So all this is the functional part, how you want to define your tokens in a blockchain network. And there are a number of ways also, like there is account based token or token based currencies. So account based where is like how our current banking infrastructure, when there is one account and everything is held against that token, that account. A similar thing could also be there in this currency or token design and development. You can use the similar account based model where you there's one account address and you are doing a transaction and storing against that accounts, and token based address where you are in a different way. It's work in a wallet and payment based infrastructure like this. And there are many use cases in the asset tokenization is a now long topic. In tokenization, there is a asset token where you are tokenizing the assets. And this asset, like you mentioned about real estate or maybe bonds, maybe uh, stocks or any luxury item, those kind of asset. And it will disturb the market, and that's why Citibank says like it could be $30 trillion economy by 2030. This NFTs, which was lost so much discussed in last 2 years, but now it also transforming to the next level where you are just not generally people think like NFTs are like non-fungible token of any art or any image, any poster, any invaluable item, but NFT could be more because it's just not only art. Collectible or images, it could be digital representation of real world items. So it's just related to the tokenization only, but the real world asset instead of just copies of images. And there are many use cases like entertainment, like gaming. So for example, let's say if there is one game, you can create a token of those games. Music, let's say for example, if there's one music release, you can get a funding or get a uh, the creator paid via those tokens, and you can track the traceability of those plays, everything. So there are lots of use cases in the industry. There's fashion and luxury brands already doing real estate, digital identity. So now even people are representing digital identity as an NFT. And mostly use cases happening in the ESG and climate space where you are like carbon credit or green financing, where you are representing this green investment as a token or green or getting the funding for the project using the green investment using these green tokens. So carbon credit is one example. So there are technically if you see this token economy is emerging, and it consists of three layers. The first above layer is the digital asset where the NFT utility and the value of those assets come in the picture, like ownership, identity, governance, and a smart contract where you are defining the rules and the all your how you transfer, how you maintain, how you use these tokens, and then you're storing all this information on some kind of a blockchain infrastructure, which is a node which you discussed in the earlier. These are computer nodes and the running some with storage. But there's more. Even there is a lots of things happening in the metaverse too. So metaverse is like I simply give the example like when there are physical store, people are going to the physical store for shopping. When the mall come in the picture, people are going to mall because they can see the more fashionable places there, right? And when this e-retail come in the picture, where Amazon, Flipkart, and other Walmart, for example, so people are going to this online shopping. But still, what experience you can see in the physical shop or in the actual shop, you can't see that experience in the Amazon and Flipkart. So using metaverse, you can bring that virtual experience in real world like environment. So and now this is good for the e-retail or other segment, but it's also impacting the financial services market. Let's say, for example, let's say bank currently want to open a shop in any city's busy road in some city, but instead of now city, maybe they can open a virtual bank or virtual branch in a metaverse environment, because people are more spending time on metaverse. So in the recent study by Gartner, it say like by 2026, average 1 hour people are spending on a metaverse. So simply, if people are more spending, where the customer, the businesses should go there. So that's why there are many banks already started offering. Let's say in Central Bank of India, Union Bank of India already launches the metaverse, launch an open banking sandbox environment. And similar, it is happening for the brands too. So number of brands are going to the metaverse environment. Uh, so so like how the brands move to from physical store to the any Amazon and Flipkart stores, online stores. Similarly, now these brands are moving to the metaverse environment. So, but there are many use cases which I covered here. So this is a Sentinel OnePay are using blockchain for blockchain-based payment platform to send and receive money internationally. So send some sandbox, some kind of cross-border payment use case. This is a BBA is a digital ledger, then enable to banks manage and process corporate loans from the start to finish. Bank of America's trade finance network already using blockchain. This INGS zero knowledge proof solution for regulatory reform for protecting customer privacy. Standard Chartered Bank is already having a digital trade chain on blockchain. Visa is having a B2B connect, which is based on blockchain. And there are some recent stories like Broadry is already running the DLT repo platform. It is already transacting a $1 trillion a month of transactions there. Siemens issues a $60 million digital bond on public blockchain. DTCC is moving to the T plus zero settlement platform, which is already processing 160,000 transactions per day. So this is already really happening. Goldman started digital asset platform for issuance of the $100 million bond on for the European Investment Bank. This is a green bond by Goldman Sachs and HSBC Bank of China. JP Morgan Chase, I think it was front runner in the blockchain ecosystem with their even they have their own blockchain quorum. Earlier they were running, but now they sold that quorum blockchain to the consensus, and now is part of the Hyperledger Besu. So they built some JP coin or some kind of blockchain based payment network, and part of the currently is part of 400 financial institutions around the world, and they're doing lots of even recently they did pilot in India's GIFT city for cross border kind of transact between dollar and Indian rupee like this. So JP coin is there. This Australia's this exchange actually already on blockchain from last 1 year. This is Australian Securities Exchange. So is reduce the settlement time, like how we discussed, it could be reduced by T to T+0. This is Central Bank of Cambodia's use case already running on blockchain from last 2-3 years. These are many use cases in trade finance. You can see multiple banks out there. There are Marco Polo, there is a Botron, V.Trade, E-Trade Connect, Comgo. So and all is running on the different blockchains. Someone running on Quorum, someone running on Fabric, someone running on Quorum. And you can see the market cap. And mostly banks are whether piloting, whether part of this instruments. This I covered, and this is what is happening in India. So India also issues the CBDC pilot, which is running from last 1 year for wholesale CBDC and retail CBDC. Wholesale CBDC where the money is transact or transfer between the central bank and commercial bank, and retail CBDC, like where the is consumer come in the picture, kind of thing. And this is another thing. There's a RBI is created one blockchain network along with 15 banks for the trade finance in the local businesses. And also they created one international Indian banking blockchain infrastructure to the complete corporate new body to adopt the blockchain use cases out there. So this is kind of domestic letter of credits on blockchain with this couple of 12 banks already in live. So yeah, I think I can take a question because already only 10 minutes left. Okay, where can I get a copy of Citibank? You simply, if you search the Citibank report now, if you search, let me show you. Even you can follow on my LinkedIn, Citibank Digital Asset. There's already asset report. This report.
Kamlesh, can you share your LinkedIn profile link also in the chat box for anyone who wants to follow you and gain more knowledge?
Okay, everyone. Okay. I share to everyone. And this is this Citibank report. You can see this, you can find this report. So if some link is there, okay, here. So there's a proper report called Money, Tokens and Games. Is the next billion users and trillions in value. This one.
Oh, that's very nice. Thank you, Kamlesh, for that. Probably we'll circulate that also if you're able to share it along with a slide. I think
yeah, so
we'll if it is a public document which can be shared, then
yeah, it is public. It's already public.
Yeah, fine. I think we can. Thank you for that. The next question, Kamlesh, shall I read out the question or what do you would like to do?
I will check it.
Okay.
So I will. Okay. This one, disconnect. Okay, there's the question by Vineet, right? I need to address.
Vineet has told that he has got his answer, so we can move on to the next question from Edward.
Absolutely.
Edward Martin. Yeah.
Correct. So given a question,
given its tamper-proof. Yeah. Please.
Yeah. Given its tamper-proof characteristic, how are data errors corrected? So, like I mentioned, is a tamper-proof, but when you want to modify some data or make the correction in the error, you need to go via the consensus process. For example, how you insert the data and take an approval by all the stakeholder node in the blockchain network. Similarly, let's say if you want to make an update request, so you can make an update request to correct your error, but this will be history there. So you can't delete the previous record where you made mistake, but you can create a new record on top of that old record with making this correction. So you can modify the data, but always there will be proof and traceability of the data will be there in the blockchain.
Kamlesh, if you will permit me, I just would like to have one more thing clarified in relation to that.
Okay.
Is the existing premise for blockchain structure is based on triple entry mechanism of record keeping. That's what I gathered from an expert, saying that you have two ledgers, so you have a third also. So there's almost a zero scope for error, because each of the previous end of the link is the beginning for the new link, and then That's how it is done for 1+2. So there is actually triple entry method of record keeping. Is it right?
Yeah,
Or
it is correct. Like how, so generally, for example, in the traditional finances, how it works, let's say we have bank account. So suppose when we transferring money from one account to other account in different bank, so we update our ledgers, right? And their ledger updated
yes,
individually by different banks. And
yes.
when if there's some kind of misunderstanding or some data loss or something issue occurs, then they need to go via any of the central bank or some regulator, let's say SWIFT or let's say any banking regulator. And why they need to do? Because both IT systems are separate and they are not trusting to each other. So they need to go to the any banking thing. But let's say if you bring this trust via technology, so let's say instead of the separate two systems, separate two ledger, there is one common ledger. Everyone is updating on the same database. So you can trust that ledger. And even before updating, you taken consent and grant approval from all the stakeholders. So nobody can decline, or is approval not just only yes or no, is a properly their digital signature is signed on that record. So let's say if there's two banks involved, writing one transaction. So both banks sign their digital signature with with their private key, which only they can do. And so, and this data is recorded on blockchain. So everyone can verify, okay, this data is written by this one and approved by these two entities or two stakeholders.
Okay, thank you. And next question is from Prabhakar. During recent market crash, cryptocurrencies are the most to suffer with loss of significant value. Do you think that the market will revive to the earlier level? What factors would contribute to this, if at all?
So I'm not a crypto believer. So even I believe in technology. So I think it's going to be more bad situation, because when the CBDC or this more regulation come in the picture, so cryptocurrency will become just one asset. Is not one asset like how we have gold. Is not going to be Bitcoin is going to be 1 million value, 1 million value, or you will make money. So people are making money because people see is one of the investment opportunity. But I think it will become just one asset when this CBDC or other regulation come in the picture. So it's not going to be go to that level.
So do you think the recent application by BlackRock for a cryptocurrency-based ETF will gain significant traction and help in stabilizing the market?
So I think only BlackRock can't do, but I think it should be done by global consensus by all the regulators. So
Okay.
so until you not define cryptocurrency some kind of asset, then there is a challenge. Otherwise,
Okay.
let's say one country approve, let's say for example India, let's say if India ban the completely cryptocurrency transaction, then it will completely destroy the market, because currently more investors are in India. So my personal belief, I think it should be regulated. Otherwise, because there are lots of issues happening. So my personal, for example, currently if I doing some business, so if I get paid in Indian rupees, I will need to pay GST and some taxes, right? But suppose if someone is in cryptocurrency, even government knows what is happening there. These are the issues, and that's why government is anyone not going to approve it. It will be completely regulated and declared as an asset.
Okay. Next one is from Jatin. Do we visualize retail CBDC to operate like a digital wallet, like Paytm?
Yeah, so I think if you see the non-technical, it looks like same, because in the how the Paytm work, right? We store some token to the Paytm wallet and then use for Paytm. But in CBDC, the similar thing. When you get issued tokens from the commercial bank, and commercial bank get from the RBI, for example, and you will get like this. But difference is that, like in the Paytm, all this transaction is written on the Paytm infrastructure, Paytm database. In the retail CBDC, all this transaction is having some kind of proof on the RBI's ledger. because they are a legal tender issuing it. So as operationally, it looks like you are using a Paytm only, where you loading some money and then using it for transaction, similar the way this real CBDC works. But technical thing is different.
Jatin, I just would like to add that Kamlesh had already mentioned in his presentation slide that it is different that unlike Paytm, which enables transfer between bank accounts, digital wallet is actually a replacement for physical currency. See, I've been introduced to digital currency by HDFC Bank, so I downloaded their app, but still not it's functioning. I think you can't see my. I think this. So I have got the HDFC's digital rupee wallet. Yeah, so I think I think it is. It'll take in a due course of time. I think it will penetrate fast. So I think.
Yeah, I also have the same invitation from ICICI, and currently there is a promo running that if I start using it, so I think Kamlesh put it rightly that as a user, it looks like I'm using a wallet, but technology behind is different. So I think he's answered.
Yeah, correct. Yeah. It looks like wallet and Paytm wallet only, where you're loading money and then using it later.
Yeah. And 1 minute, I think there is next question is a bit a long one. I think Vineet has got a very complex question. I don't know they can do it now or later also. What is the first time and also running cost of setting up a blockchain platform either by DTC, direct to consumer, having 50 million turnover, dollar or users? Just he's extracting the maximum out of a single answer.
No, but simply putting, I just want to get an approximate idea about what kind of costs are we talking about.
I leave it to Kamlesh to answer.
So I will address. So let's, for example, we discussed there are two kinds of blockchain. One is public blockchain, another is private blockchain. So if you want to use a public blockchain, there is no infrastructure cost as it is. There is no cost. You can use let's say Ethereum or Polygon network and start your writing business logic and use it and just simplify the transaction fees on the transaction. Let's say you have 50 million turnover, 50 million user, and let's say 50 million users doing let's say 1 or 2 transaction, or let's say there are 1 million transaction daily happening, right?
Correct.
And in Polygon, there is a transaction fees around 2 cents. So that will pay. But let's say maybe in the longer run it will be costly because you 1 million. So maybe you can create a blockchain network where because for the 1 million, for the 50 million users in one public blockchain network is costly in terms of you paying the transaction fee and not owning it. If the cryptocurrency price increases, your cost will emerge, the cost will increase. And also the settlement time or the dependency or let's say some the regulation come in the picture, then it's challenge. And also issue with what we say, this cost will be increasing day by day. But let's say if you create the private blockchain network with let's say limited your business owner, let's say there are 6 to 7 different nodes. So 6 to 7 node blockchain network for this kind of setup, you can create let's say Hyperfabric, for example. So in Hyperfabric for doing a 1000 TPS, you can easily do in a 50,000 to 1 lakh cloud computing bill.
Okay, understood. Thank you.
Thanks, and last question is from Jess. He would like to know about the impact on new global identity standards of MDOC, MID, MDI, etc. Helping gain acceptance to digital wallets and tokenized applications.
Yeah,
I think you have dealt with that in a recent topic and same topic in a different forum. I think I saw that in the LinkedIn, but anyway, I leave it to you.
Yeah. So this is just talking about the digital identity space. So because when you using the digital asset, you need the proper identity of the users. So blockchain. So even in Hyperledger, even we have a separate Hyperledger Indie kind of blockchain network where you can build your SSI or W3C standard identity thing. But here you're talking about MDoc, MID, MDI. I've not heard about those standard, but I understand about the SWIFT, the W3C standard, self-sovereign SSI or DID standard. That could be used there.
Yeah, they're new global standards for identity to tie a mobile phone to an absolute identity. So MDL is mobile driver's license, is mobile ID, which will become the passport standard, and then mobile doc to tie any associated documentation to that. So, you know, that's a big ANSI and IEEE push right now. It's already being used in the United States in a bunch of different use cases, but it ties it to it. So what it allows you to do then is tie the identity of a person to the actual mobile wallet, and it kind of extend it there. And we're kind of seeing that that's going to have a big connection then to allowing, you know, tokenization and digital assets then to cross into very traditional things like healthcare or behavioral care, social services, government services, things like that. So it crosses, you know, as you have the tokenization and the financial aspects of it, you then have the identity standards and the connection to be able to establish, you know, privacy and rules around identity and how you use things.
Yeah, got it.
Well, thank you, Jess, for that additional info. I think we come to the end of the session.